You want to get into trading to start making some money. So without wasting any of your time, I will tell you exactly what you need to do to actually start this off perfectly. Now, the first thing you need to know is TradingView. TradingView is pretty much what you will spend most of your time looking at. TradingView is where you're able to see the charts. TradingView is where you're able to analyze the charts to actually see exactly what you're going to buy and what you're going to sell. TradingView is literally free to use, so you're able to almost analyze the markets from day one. You might need to get the advanced version when you come down to back testing, but I'll get into what that is shortly. Now, the second thing you need is a broker, and a broker is where you will be buying and selling whatsoever you plan on trading. This could either be indices, this could be Forex, this could be so many things, but personally, or the most common is usually Forex, or some people also trade options. So these are some options that you can look into. But the main thing to note is that they are regulated brokers and unregulated brokers. Regulated brokers are usually very good to use, and you have the confidence that if worse comes to worse, your money is actually being protected, so you will get your money back and it's protected by the FDA and all sorts. But the thing about regulated brokers is the leverage is extremely small, and the best way to look at leverage is pretty much money that you don't have that you're able to trade with. For example, if you have $5 and you have a leverage of 1 to 100, then that $5 is times by 100. So that $5 you're able to make trades of $500. Now, there is more to regulated brokers, but this is the one thing that stands out, because if you have a small leverage, then you're not really able to make that many trades at once. Sometimes you might see 2 or 3 trading setups or some trades that you want to take, but you're not able to open these trades just because your leverage has already been maxed out by a single trade because of these small leverages. So when it comes to unregulated brokers now, they usually have 1 to 100, in fact 1 to 500. Some of them is just too much. You don't really need 1 to 500, but generally having a higher leverage is very good, because there will be some cases where you want to open several trades but then you're not able to, and it's going to be a bit annoying because now you're missing out on money that you can make. But you do want to look more into regulated brokers and unregulated brokers just to see which one you prefer. If you do want to find out all the regulated brokers, then when you are on TradingView, it will show you many regulated brokers that you can actually use. When you do open an account with a broker, I am not saying that you should put money in straight away. You literally do not know what you are doing. So there is one thing you want to do. You want to open a demo account, but I don't personally recommend being a demo for too long, but you do still need a demo account to at least get warm in terms of trading, to know exactly what lot size means, to know exactly how to place a trade and close a trade, and just the little things. The reason I say you don't want to spend too long on demo is just because when it comes to being successful at trading, personally, I believe that you want to be on the live markets for most of your experience, because the psychological part, which is the hardest part of most of it, comes from trading live money, whether that is even $100 or 1k or even $50, whatever amount it is live. This is money that is yours, so when you lose it, you'll feel a lot more than trading on a demo account that isn't really yours. But on this note, how do you actually now begin to know what all the different terminology means? Now, this is when I would recommend you go onto YouTube or another website called Baby Pips. I personally use YouTube. YouTube has YouTube education is like a big thing at this point, or YouTube University as people sometimes call it. There is everything that you need to know on YouTube these days, so you can start off from there, or you can use Baby Pips. Baby Pips is also a website that has every beginner thing you need to know about trading, literally from the terminologies to the little things. It is all broken down on Baby Pips, so you can literally start from there as well. Once you begin to advance a bit more, then I would say you can actually use like my channel, for example, to see the strategies that you want to start with, exactly what works, so you can stick with certain strategies and start using them and start making money from them. But for those who are complete beginners, then you do want to find those beginner videos to first understand what is going on. Now, the next thing is super important, and listen carefully. If I could niche down exactly what you need to know for trading, if I could just niche this down to just 3 things, then I would say this would be market structure, trends, and risk management. Those are the 3 most important things I would say you need to know. And once you know these things, you kind of have a general idea on how to start trading and making money in the markets. Now, let's start off with trends. Trends is pretty much just knowing if the general market is going upwards or if it's going downwards. There are things known as time frames, and time frames is basically seeing what's happening in the market and literally 1 minute spans, or 5 minutes, or even 15 seconds, or whatever it is, or even in the hour, on the daily, weekly. You can kind of see the bigger profiles, and every candle basically means that time frame. One candle could mean a daily, one candle could mean 5 minutes. All depends on what time frame you're using, but overall you can see the trend of the market, and generally you want to trade in the direction of the market. This is just easy, so that way you're making money and you're not having to fight against the market to make money. There is a lot more to this, but that's the simple way of putting it. Now, the second thing is market structure, and this kind of work hands in hands with trends. Market structure is when you're now able to see, cool, this is when the market is going to start going upwards or when it's going to start going downwards. And the key thing to look out for is when you're seeing things known as higher highs and lower lows, or lower lows forming lower lows and more lower lows. The market doesn't just move in a straight line upwards or just goes downwards. It usually goes upwards, it breathes for a little bit and comes down, then goes upwards again, then breathes again, then goes upwards. That is how the market moves, and obviously it does this in the other direction as well. In some cases, the market does consolidate where it's just going in a straight line and it's just going upwards, downwards, but it's not breaking any structure. It's not going, it's high or low. It's kind of just moving sideways in a range. That also does happen, but you want to understand and be able to recognize when these are happening, because once you start to understand market structure, that can sometimes now give you an edge to where you're able to trade against the trend, because you would know that the market is now going downwards. And in fact, I was able to catch a trade literally yesterday when I was able to see that the trend changed on the 5-minute time frame and it was going to start moving downwards. So rather than me waiting to still buy upwards, I was able to literally catch the sell from the top, almost riding that down to the bottom and making a lot of money from that. So knowing market structure and time frame, it will give you an edge, and this is when you'll begin to understand what is even going on the market in general. And now risk management is huge. Risk management is what's either going to keep you in this game for a long time or what's going to make you quit in literally the next week. The simple idea is that in trading, you will lose money. You can't stop yourself from losing money. There will be times when you follow your rules, you follow your strategy to the T, but you will still lose money because that is just unavoidable. Now, the best way to overcome all of this and actually stay in the trading game for long is risk management. So this is the idea of either risking a small amount. So generally you want to risk, I would say, no more than 1% per trade idea. When you see an idea, you don't want to risk any more than 1%. You're either making one-to-ones consistently to where you're winning 80% of the time. A lot of people are against one-to-ones, but they do actually work. Now, you can also do one-to-twos. One-to-twos is basically the idea that you're risking, let's say, $50 to make $100. Those are one-to-twos. One-to-twos are nice because what this means is that you might make 2 wins, and now you've turned that $50 to $100 and another 50 to 100. So now you're up at 200 and you're still risking just 50. So obviously now that you have $200, that now means you have to lose 4 trades just to lose that $200. 4 trades. So that's 4 trades in a row. So obviously this is unlikely once you start to know what you're doing. But generally you see how if you're somebody who's making 1 to 3s consistently, now if you win 1 trade, you're already up 3%. Now you have to lose 3 trades just to be back to break even. So that gives you like a breather, because you will lose on the market, but you know that when you win a single trade, you know that you're going to be up a lot. So it is good to find that balance between high risk reward and also winning a lot, because in some cases when you look for 1 to 5s, 1 to 10s, you will lose a lot. Some people actually are still profitable, but they probably have like a 15% win percentage. This is because to go for those kind of RRs, you will lose a lot. But in some cases though, when you do actually win, you win a ton of money. So this works, but you have to find the balance for you. Are you somebody who can lose a lot but still be patient and know that your strategy works, and when you win, you win? Or are you somebody who, you prefer just winning often, but you might win small, 1 to 2s here, 1 to 1s here, 1 to 2s here, but at least you're winning most of the time. All of this now goes back to lot size, and lot size is basically just what you use to trade on the market. It's almost like a measurement in some sense. So your lot size is what you will use to place trades, and this is what's going to determine, cool, you're placing $100 on this trade, $200 on this trade. So to know exactly what lot size to use, you want to use lot size calculators. Lot size calculators exist either on the internet, you can just type that in, or even on whatever phone you're using, Google Store or the App Store, you will find it there as well. But it's important that that first trade that you make that is live, you do use the right lot size, because I made a huge mistake, didn't use the right lot size, and that lost me a ton of money. So make sure you use the right lot size, so literally your risk management is good from the beginning and you can start trading well, rather than learning that mistake afterwards. It's always good to learn from those who've made the mistakes already, so that way you already have an edge up. Don't make the same mistakes that other people already made. You're just slowing yourself down at that point. Now the next thing after all of this is now you want to find your own strategy. Personally, I trade supply and demand. This is one that resonates with me. This one that's perfect for me. I've been doing this now for about over a year. Supply and demand works. Supply and demand is literally what I trade. You can find many videos on this on my channel. So the idea to supply and demand is just finding aggressive buying and aggressive selling selling. So when aggressive buying happened or sells, this is usually done by big institutions, banks and stuff. So we are not, like us regular traders aren't able to move the market that much. It takes a lot of money to move the market. So when there's a huge sell, it means that usually there are many sell orders waiting at that point to happen again. So we're just looking for this point. When price goes back there, we enter for that sell and join, the ride basically when that sell happens. So the reason I'm saying this is you want to find your own strategy now. When you find your strategy, you want to stick with it for at least, I would say, 2 months. You want to stick with it and make sure you really test it out before you move on to another. You don't want to bounce around from strategy to strategy. You want to stick with one. So if you do actually want to check out what supply and demand is saying, then be sure to check out my channel. Find many videos down below or on the channel. And if you do actually want to trade with me and see exactly how I trade, then there is a VIP link, down in the description as well. Or you can even join for free to actually just see what kind of trades I take and to learn from me. I'm more than happy to answer any questions that you do have. My win rate for this strategy is around 70%. In fact, it's actually increasing now because I've been able to make some changes to further develop the strategy to make it work perfectly for me. So if you do actually want to see more videos on trading, on exactly what I do on my back test, then be sure to click any of these videos that you can see on the screen. Thank you guys for watching, and I'll see you guys in the next one. Peace.